Hello, everyone, and welcome to a brand new episode of the Indianaut podcast, where we interview some of India's next best analytical and creative minds who are not only revolutionizing their own field, but at the same time transforming India's entrepreneurial ecosystem one step at a time. Our guest for the day is the CEO at Mirae Asset Venture Investment India. Since setting up Mirae's venture capital arm in March 2018, he has overseen investment in startups such as Ola, BigBasket, Zomato, and Shadowfax. Prior to Mirae, he was involved with Kalaari Capital, where he was actively involved in sourcing new opportunities and helping existing portfolio companies. He has received his MBA in Finance, Strategy and Entrepreneurship from IE Business School, Spain, and did his Bachelors of Engineering from Mumbai University. We have with us Ashish Dave. Let us jump right into the conversation. Hi Ashish, I hope you're all settled in.
Yes, Gautam. Thank you very much for having me here.
Excellent. So let's get started. So Ashish, you started your career as an intern less than 9 years ago. And now, since setting up Mirae's venture capital arm in March 2018, you have seen the investment of around $200 million into startups such as Ola, BigBasket, Zomato, and Shadowfax. So I think this decade for you has been full of interesting stories. So, tell us your Indianaut origin story.
So I think, I started as an intern at Mumbai Angels, and then I went on to sort of lead Mumbai Angels along with my colleague Ashishs, Shruti, Ankit, and for 2 years I did that. And after that, I moved to Kalaari, and at Kalaari I was working with Vani, Rajesh, Kumar, and all the other team members. Worked there for 4 years. Worked on some of the most prolific deals that Kalaari did. And after that, in 2018 is when I got an opportunity to be with Mirae. I joined Mirae. And at Mirae, my scope was very simple. They wanted to set up India venture practice. Mirae being, South Korea's largest financial services group, was very active in public markets. And what I felt is, fly-by-night operators, they have very much a team on ground. And they are very long-term investors in India. Because you always had this thing that every single investor was coming into India and setting up their India practice, but was not sure whether they will commit it to India. But here I felt that they are committed to India because of the track record that they have on the public market side. So from 2018 to today, 2021, what we've done is the first year went into raising and setting up the strategy, and what I realized is India growth was a very interesting opportunity because there were too many early stage funds, but there wasn't too many committed growth stage investors on ground in India. And we said, why don't we play that strategy and why don't we go for that opportunity? And it worked out well. In last 2 years of deployment, we've deployed about $300 million worth of deployed and committed $300 million worth of capital. First into Zomato, BigBasket, Shadowfax, Ola, Zolo Stays, Raise, Jai Kisan, Trail, ShareChat, Unacademy, Jupiter. So these are some of my investments. We will continue to make investments in growth. We've set up a small early stage vehicle to get into some opportunities very early on, but growth remains our core, bread and butter. Early stages probably into some opportunities where we feel it's important to get into a little early because either we have a lot of conviction, we've seen some of these things play out early on, or we just love the founder and we said, no matter what, I think we can take that early bet. That's what our early stage vehicle and a growth stage vehicle will do. That's our plan, and that's what we've been doing so far.
That's excellent. That's great. And we'll talk about the investments in your investment philosophy later. I want to talk about something at a more macro level right now. At the start of 2021, Mirae launched an India-focused early stage fund, right? And to give our viewers more context, Mirae's previous funds have been Asia-focused rather than India alone, right? So what is your bull case for Indian technology? Why India and why now?
See, I think bull case is, you're sitting on a huge population, which is technology, it's tech savvy. It is grown up on technology. The data costs are very low. Everybody has a smartphone. We've leapfrogged a lot of things. We leapfrogged desktop to come directly onto mobile, right? That's a very interesting thing. The GDP per capita, of course, is a thing that is still not picked up the way. But if technology comes in and then GDP per capita also picks up, which will happen over a period of time, I think we will see a huge growth in Indian consumer story. And if you are seeing a huge growth in Indian consumer story, tech consumer is what you will bet on. And that's why we felt that, hey, India is a huge, it's a huge economy in its own sense, and it's the market which nobody is leaving, be it Microsoft, Google, Facebook, Apple. If they are, of course, going into it, of course, there is something important. We are a very democratic country. We allow a lot of other companies to come and set it up over here. So it's a global field for anybody. So anybody who wants to say dominate globally will need to have India on its map. And that's where we said that, this is a good time to, ramp up investment. I personally have been like, pro India for last all my life, right? But even the Korean investors were convinced that this is a good time to be here, and their experience of last 15 years in Indian markets did help them to sort of take this call that now it's time to sort of do that. Coming to why we set up an India-focused fund, for 2 years we've been operating out of a global fund. We will continue to do that, right? I think there will be a global fund always, and India will draw down its allocation from that. But at the same time, you do want to set up an India-focused fund because there are certain opportunities which are more suited to use that vehicle. Also it's your commitment to the country and to the founders and to other investors that, hey, it's a message that, listen, we are not here for just 1 to 2 years or 3 years make investments and disappear. We are here for long term. We have boots on ground. And it's a step in the direction to show our commitment that we are committed to the Indian startup ecosystem. So it's more from that perspective. It gives you some flexibility in certain regulatory deals. It gives you leverage. So I think those are the factors that go into. We will have India funds, and deployment will happen based on what suits the opportunity.
Right. That makes sense. Absolutely. And continuing our theme of talking on a macro level, let's talk about China now. So we've recently seen that Chinese tech companies are facing a barrage of regulatory changes left, right, and center, right? And the ongoing China tech crackdown has resulted in over $500 billion being wiped out from the Chinese tech stocks in a week, including the likes of Alibaba and Tencent. And some even say that China has effectively ended their own edtech sector with these moves. So in the context of everything that is happening in China, what do you envision is the impact of all of these moves on the Indian startup ecosystem?
So I look at it this way: somebody's loss is our gain. Okay, and I'm pure capitalist about this particular thing. There are a good amount of investors who had allocated certain dollars for investing in China, but with what's happening in China, they're not able to deploy that in China, let's say. So what is the next market available for them to deploy that capital? It naturally flows into India because India is equally large. It has a very educated population base. It has a population base that is young, that is growing, that will start earning money. The GDP per capita question that we spoke about, that will be solved. So they are taking positions in India, right? The ones which knew India have been taking positions, but the ones which were not knowing India, who are very comfortable with China, are now open to sort of deploy that capital. So some of this capital is going to make inroads, and which is what you're also seeing, that new investors are coming. What has happened in 2021 and 2020 is investors which are not heard of, which you've not heard of, which have not been investing in India, have started investing in India at growth stage, right?
That's wonderful.
So it's a good step for us. Some of this capital may reduce, probably, if things go back to normal in China, people will, but that doesn't happen over in a very short period. These things take time. But whenever it happens, some of the capital will go back to China. I'm not saying no, Some of these investors will start taking positions more in China, but we don't know when that will happen. But till the time, I think, this is there. I think our opportunity remains more attractive at this point in time.
Definitely.
Additionally, it will give what also it means is, we are a preferred investment destination also because all said and done, we're a democratic nation, right? The kind of decisions or steps that have been taken out there, the possibility of those in India is very, very rare. You can't take some of these calls, decisions.
Absolutely.
We have a very strong judiciary, we have a very strong legislature. So it doesn't happen that way. So which is why investors feel more comfortable investing into this thing. So policy is far more predictable, relatively predictable, if I may just put it that way. So I think it's a positive step for us. This is an opportunity that India and Indian policymakers should capitalize on and should ensure that, how do they make this investment by other investors far more permanent, far more predictable, make it more attractive. I think that's an opportunity that our policymakers should look at.
Definitely. I think just to summarize, and from the sentence you capped off on, their loss is our gain. And we should definitely capitalize on that. Yeah.
Yeah.
So, Ashish, I want to focus on your subject matter expertise now, and that is, picking winners. So, venture capitalists or venture capital investments are highly risky in nature, right? And they get more and more riskier as go back in the journey of a startup, whether it's a seed stage or a Series A stage, right? So tell us the secrets behind your investment philosophy. What do you look for in a startup?
Yeah. First of all, I don't think I have picked any winners yet. I'm still very early in my career where I've just made some investments. It's too early to even say that, all of them they'll succeed, not succeed. Yes, they've been promising, but very early. This is a game where, what looks good today probably will not look good tomorrow, next year. It's a year where, things change over a period of time. One quarter, things may go from good to bad or worse, or, some deal which is, one of the most undervalued deal probably will become the most overvalued. So we don't know. Coming to how I think and invest, I think there's nothing unique that I do. I think all investors follow this particular thing is they back a good team at the end of it, because you back a good team in a bad market, in a bad sector that it is operating in, they will figure it out and they will move to a good market. But if you pick a bad team, even if the market is attractive, they will not be able to execute really well.
Right.
This is a far more subjective thing. How do you assess whether you really backed a good team? It's very subjective. I think early investors take that gut call based on the lot of interactions they've had over a period of time, and they get some, I would say a gut feeling that, hey, this is a team that they should back. This is a founder they should back. That's what they go for. At growth stage, we have far more data to look at. So we look at the team, we look at the depth of the team that they built, we look at the data that they have, because there's a lot of execution that they have done. We see all the pivots that they've done. We have comparable business models. And at the same time, I'm not looking at just one company. I'm looking at 2 to 3 companies, because by the time it comes to us as growth, there are 3 players or 4 players that it's a small, it's a limited player race, what it is, right? So you can do an objective analysis and a subjective analysis, and you can pick the winner. That's what you can get to do. And hence, the risks are lower. Your returns are also relatively lower, but the capital that you put is a little high on the, so for example, you will put a, 10 million to, 40 million kind of check size. So, right, even a 3x or 4x will get you a significant return. That's what we're looking for. So at early stage, you're looking at, taking smaller bets, and one of them will really grow into a large one and return the entire fund and, multiple of the fund. While at our stage, so mortality is going to be high at early stage, whereas our stage, the mortality is going to be low. So you are mostly looking at a very stable portfolio, which is having, 80% survival rate, whereas here there is 75 to 80% mortality rate. So that's the flip in which you operate. So it's that way. But is it hard? Is it difficult now? Yeah, it is difficult now. It's not easy, because the venture growth market is also not very deep. It's a little shallow. But over a period of time, I think there will be enough depth that will be created because we have seen a barrage of deals on the early stage side. We will see no new models emerge. So we will see this deepen over a period of time. And we'll continue to sort of, follow the same thesis and picking winners. This is the difference at early stage versus growth stage. And this is how we pick. And I think when I say we, I would say all VCs pick this way. There is nothing unique in our assessment. The only unique is someone may have a view that this will work and someone will say this may not work. That's the only
But
thing.
that's subjective in nature, like you said.
That's subjective, but that's what decides, by the way. That's what
Right.
decides the returns.
Definitely.
Right. So if somebody would have thought that, hey, when Swiggy and Zomato came up with the delivery model, those who took call on that did really well. But the others who said no, I think there's already Food Panda, some of the players there. I don't think this will work. If they took that view, of course they've not. So they've not been able to sort of generate returns, or they missed out on deals. So your view matters that way. It will only play out years down the line. It won't play out that very well. So it's a game where you invest and you sit quietly, be patient about it for your past one.
Definitely. Yeah. I think just to add to what you said, I think what happens at the early stage is that, venture capitalists are looking for fat tail events, right? They're looking for one or two winners in a portfolio of 50, which really, go say 10 or 20 times their, initial investment, and which averages out all of their other, mortality rate-based investments. Whereas at the growth stage, while you're not looking at, say, a 10x or a 20x, you're maybe looking at, like, say, a 3x or a 4x. But at the same time, there's more stability over there. So I think that is also different in the mindset of a early stage versus a growth stage investor.
That is, but at the same time, I'll also add, when an investor looks at any opportunity, they are not looking at it that, okay, these are going to be my 10x and these are going to be my stable. I think they look at each and every opportunity and whether this can really be a 10x opportunity. Only if it is, then they invest. Otherwise, they won't. Definitely. Some may feel that is this fair or is this not fair? I think, see, it is, if you look at it from investors' perspective, they are doing a fiduciary job of managing LPs' money. That is a commitment that they have towards LPs, which is what they do. So I don't see anything wrong in that. But that's why, some business models are fundable, certain businesses are not fundable. And we tell entrepreneurs that, hey, if you do not make it attractive enough for investors may not bite it. But there are other investors who are okay with the lower return because they believe in the idea and opportunity more than the returns. So, you have to pitch to those kind of investors. So it's important to sort of say what kind of investor you're putting into. Commercial investors end up really looking only for returns. But at the same time, they do enjoy part of money of backing some exceptional founders. And to be very honest, nobody knows anything. Kya hoga? Nobody has clue. Right? we can put whatever fancy stuff in the thesis and in the Excel sheet at the end of it. Nobody has clue. Nobody has a crystal ball, crystal gaze.
Definitely.
So we can just sit and say that ye ho sakta, wo sakta. Honestly, nobody has any clue.
I think it's true for investing in general, not just venture VC investing, but investing in general, right? Like, you don't know what will happen in the future. No great investor is going to have 100% of his investments work out. Some companies will always fall. Business cycles do end. All of that is there.
Yeah.
So, expanding on this, I want to look at, Mirae's last couple of months, and the last couple of investments they've made, whether it is ShareChat, Trell, Jupiter, Jaikisan, or Coup. What has been the thesis behind investing in these specific companies? So, we can talk about these companies individually or in a generic manner, whatever you feel, better drives the point.
I think, our view is very simple about backing exceptional teams. One thing that really binds in all of these investments that we've made, it's run by an exceptional team, a founder and plus team. Okay, it's not just founder that I'm talking about. I'm just focusing on our team. We are not just betting on the founder, but founder has assembled an amazing team, and we back an amazing team which is operating in a large, massive market. So you take an example of ShareChat, right? Short video format is not going to go away. I think, it's probably a source of entertainment, source of engagement, which means, there's a huge monetization possibility of that. There are so many influencers that are there whose livelihood now depend on some of these platforms, because you know it's very heartening to sort of see, right, that someone in some remote area is making some video, is endorsing a brand, has that followership, is been able to earn money, which he or she wouldn't have been able to do in the absence of these platforms. It's hard. People may say, "Ha, yeah, pura time TikTok ya ye reels bana ke time waste karte hain." No, but the amount of effort they put to make some of this content, which brings probably 30-second laughter to you, fun for you. There is so much of effort that goes into it. There's a lot of hard work that goes into it, but they are generating. There are some micro entrepreneurs in their own sense, right? Um, so we love that concept, that how it has enabled. There is some cringe content, of course, but it's okay. Content is content at the time. I think people are having fun about
Definitely.
it. It's totally
Definitely.
fine. It drives
I think
engagement.
I think I think cringe content has been
Um,
there on YouTube as well for years, right? I mean, you don't look at
it's
the
there.
cringe,
It's there.
yeah. And you don't look at the cringiest part of the
Yeah,
platform and
cringe.
judge it entirely, that's how it goes.
No, I think cringe is what? Cringe is something not to do with platforms, something to do with people. Okay. And I don't think, cringe is going to go away till the time people are there. People are cringy. So cringe content is not going to go away.
Definitely.
So we really love that story of how all these people are, this is a new source of entertainment, short video form of entertainment. Um, Becomes a very distribution platform. Again, founded by amazing team, Farid and Banu, and all these people have been super, super amazing, right, Ankush? Second, if you look at a massive market, you look at Trell. Now, all these influencers are there, they need to monetize, right? There has to be some commerce activity for them to make money, because I was reading one post that, one particular influencer made so much money that he ended up buying a car, his dream car, and he bought a nice dream car, and he took his family for vacation. Now, this is what you want, right? Someone has to make money eventually, and if there's a platform that will help all these influencers make money, we feel, why don't back that platform? So that's why we back Trell. Jupiter, of course, Jitain has been an exceptional founder. He knows the space in and out, and he's assembled an amazing team. Banking is a huge market. So, if you look at public market funds, every mutual fund will have at least 30% exposure to banking and financial services, right? A good part of your Nifty's return comes from banks. You're still long on bank. If you go HDFC Bank, it gives you probably 20% year on year, right? Why? Because banking is still underpenetrated, right? But there has to be a new experience in banking. We feel the new banks are really going to bring that new experience for you, that you don't have to go to a bank branch and submit a form if you have to change something. How everything has to be done virtually is what they will try and do it. These banks, or these neo banks, are actually the DNA is tech first, versus the other banks with the DNA is banking first. How that DNA has to be, you can't really build a DNA, change the DNA again. But we feel some of these neo banks can, really give these large incumbent banks run for their money based on experience, right? And then that's why we backed Jupiter. Jai Kisan, again, agri financing is a space where there isn't too much of progress that is made. India is still a huge economy that is reliant on agriculture. Farmers need proper financing. So, how do you provide financing? So that's why we backed Arjun and his team, which is going for agri financing. Raise purely because what we feel is Praveen has done in his previous stints can come up with a seamless product which was launched this Friday, and we've got amazing reviews for that particular product. In 6 months, he's built the product team from scratch and launched it. And we feel that investment in India will only increase from here, and people will use better products to sort of make investments. That's why we back that. We get a massive market. Cool. What we feel is, Twitter is just restricted to, let's say, 40 million Indians. How do you take it to the rest of
The country. Right.
large population. You can only do it via platforms which are Indian platforms, which are made for Indians, and allows use of multiple language. And today everybody wants to connect with consumers at a direct level, right? So Ku enables that, again founded by Aparamaya, who's been a seasoned serial entrepreneur. So I think these are some of the bets that we've taken. Of course, not to forget an academy. Gaurav is a super product guy, and the way he thinks about product, I don't know if there's someone
Absolutely.
in the tech who thinks like him, right? And um, he has the ambition and aggression to sort of become one of the finest tech companies in the world. And he has been executing at a relentless pace, right? And built a beautiful platform like an academy. Um, so our bets are more about the team, product, and the market in which they're operating. And for us, um, this is what attracted, and that's the thesis, right? That's what we have invested in so far.
That's incredible. That's incredible. And I think just to add to what you spoke of, and you talked about An Academy, I think An Academy, with the way they are expanding their product portfolio, right? Whether there is a re-level or whether there is a graphy which they've introduced, right? So they're also like entering into new experimental domains in the educational technology sector, which is absolutely incredible. And I think Gaurav Munjal's entire product building philosophy and just a product management philosophy is absolutely incredible. So as a PM, I actually do look up to some of his writings and some of his thoughts on the entire product culture and how to build the right product.
Absolutely.
Right. So, Ashish, let's talk about venture capitalism as a career now. Venture capitalism as a career has truly emerged over the last couple of years, right? Specifically amongst the younger generation. So, what do you think has led to this rise, and what advice do you have for folks who wish to enter this field? How should they go about it?
So I am a little. I'll be biased a little bit over here. Very polarized views that I have about venture industry. Um, if you really want to be a career investor, venture investor, jump into it. If you really want to become a founder, you want to do something else, but you just are trying this and then getting into it, my recommendation is not to do that.
Okay.
Because once you get into investing, your experience compounds for you to become a greater investor. But if you stop it there and then go into founder or becoming a founder or whatever, I would say start right now. Because if you start from now to for the next 3 to 4 years that you will become a entrepreneur as a founder, I think that experience will come to help you in future. Anything that you choose, right? Pick it from that particular perspective. So, and again, as a venture investor, you do not get any too much of operational experience. You are actually just an investor, but there isn't too much of operational experience that you bring to the table, right? So if you're looking for any operational experience and say, I want to come and do this and learn, I will disappoint you by saying that you don't get to do that. Founders are executing it.
Right.
They have a team to execute it. You are not sitting with them. Yes, you may get to work on some projects with them, but you're not actually sitting with them and operationally helping them. That model is still not there yet, right?
I believe that's the operator model, right? That
That's
you'll
an
not.
operator model. That's an
Right.
operator model. That's
Right.
not there yet.
Yes.
Will it be there? I think will be there. But again, you are not going to learn operations by becoming a venture investor.
All
A lot
right.
many people come and tell me, when even in interviews, and I'm very clear about this. They come and they tell me that I'll get to learn from entrepreneurs. Yeah, you get to learn, but that's not what you're here for. You're here to basically invest in opportunities and be a good investor by investing in those opportunities. If you want to really help entrepreneurs operationally, join the startup.
Hmm.
You don't have to be an investor for that,
True.
right?
True.
You don't have to basically take you want to say, hey,
Absolutely.
this is so join a venture firm if you want to be a career venture investor.
Sure.
I don't think I like, yes, you may not have an idea, you may not have a team, and that's why you want to just get your foot in the door and get yourself into the venture ecosystem to learn. It's okay, but I'm just saying that don't expect that you will learn anything operationally being part of a VC firm. You don't get to. Yes, you do get to listen to all these great founders when they talk in a board meeting, etc. When they pitch to you, you get to learn from them.
Right.
But apart from that, I think operational work is not much. So if you're looking for operational work, I would not recommend this industry. If you are going to become a career venture investor or career investor, long-term investor, private investor, yes, definitely you should. And this is
I
more
think
of an
just to
industry which
just to add to what you're saying, I think it's all about, if you want to become a career venture capitalist, get your hands dirty by working at a VC firm. If you want to become a founder, get your hands dirty by working at a startup and learning there, right? I think it's just all about, going at the roots level for whatever you want to do and committing to it, essentially.
yeah. So that's exactly what I'm saying. Like, you
Yeah,
don't have
definitely.
to sort of mix couple of your these things. You can. Am I saying no? No, you can do that, right? There have been cases where exceptional analysts have basically gone and become founders, right? Be it Vikram or be it Neha from Traction. Some of these people have become amazing founders. Is it possible? Definitely, it's possible. But I'm just saying that don't look for operational experience. That you will get operational experience at a VC. You will not try. At specific firms you may, but at most of the firms you may not. At the same time, this is not an industry which is about money or finance as much as it is about people. When you apply for an investment role, you have to really understand what it takes to be an investor. You really need to think, of what should I invest in something that will become a huge story 5 years later or 6 years later. You're not investing in today. You're investing in what will be so you go back and you say in 2007 or 2009 I'm investing in something which is going to be Flipkart in 2020. How do you think that? It's very easy for you to think, okay,
Definitely.
I will invest in Flipkart today, but the art is to invest in Flipkart in 2009 and 2007, right? Not to invest in Flipkart today. So so can you have that view? It's about people. How can you really understand people at multiple levels, at depth, what really motivates them? So it is soft skills are more important role here than anything else. Understanding how technology is moving, how the trends in technologies are moving, that is very critical, right? And getting a sectoral view. I again am not too big fan of having too many frameworks and working like a McKinsey BCG guy who's building frameworks and doing all that stuff, because I know several of these people who've done and they miss major sectors. So I'm not a big fan of all that stuff. You don't need to do all that stuff. You just need some basic amount of common sense, which is again very hard to get to be very good at this. And financing is just one aspect of it, which is the technical part. Not too hard, easy to learn. But the former is hard to learn. Yeah.
That's wonderful, Ashish. I have one last question for you, right? What advice do you have for other aspiring Indianauts or entrepreneurs in general?
So I always feel it depends, because it's a very vague question. It's a very broad question. So I'll try and answer it in the best possible manner by saying, see, funding is just not going to make or break your company. Do not, funding unfortunately is glorified too much. In fact, there was a tweet that I saw that it's ironical that founders and even investors are celebrating a dilution event where you've lost a part of your company and you're celebrating it. So it is funny in the sense. Funding just gives you resources to sort of execute something in 1 year over a 2-3 year period.
Right.
It gives you resources. How you use the resources will really define your success. So don't get too obsessed about it. And after you've raised funding, focus on execution more. Execution will get you good execution will get you far more sustainable, far more reliable capital from good set of investors. So focus on execution more than anything else. These are basic things that will never go out of, be it 2020 or be it 2025 or be it 2030. They are not going to go out of fashion, right? I'm a little old school about these things, and I think these work in whatever time period you are operating in. They will never go out. And focus on building great teams, right? We've often seen that, people don't focus on really hiring and getting good talent on board, or probably they don't create good culture that a good team is retained. I look at it this way, a particular person's hours, if you split it right, he spends one third of his time sleeping, one third of his time in office, one third of his time personal. If you do not create a good culture, right, that person will leave because it will somewhere affect his sleep or affect a personal life. At the same time, you have to create a great work environment that people love to come to work. That way, the good talent that comes to your office will not have to really, look out for opportunities outside, right? Just focus on that, right? You will see the amount of effort that you will waste in hiring people just because people leave, because you've not been able to create that, is huge, right? So focus on these things, right? These things are never going to go out of fashion. I know with the amount of talent crunch that is there today, there are a lot of people who are still being able to retain purely because of the culture that they have.
Definitely.
And at the end, teams build product, right? You raise money for what? You raise money to hire a team, right? Uh, you raise money to hire a team. So focus on those things. I think rest everything else all just hogwash. You don't have to be like, on Twitter or active on any other things because others are active. You be active because you want to active, that's okay. Because you want to engage with people, totally okay. But just because some are there, you have to fall for that peer pressure. Don't do it for that. So have your own individuality. Do things which you feel like. There are no set rules in this industry. Absolutely no set rules. You don't have to take venture funding to be successful. I really respect Nitin. He has not taken venture funding. He's been super successful, right? There are several people. There is no degree that is needed for you to be successful. A lot of people, they ask me whether I should do MBA or not to become an founder. I said, the same amount of money, why don't you just put it in your own startup, learn something and do something of your own, or probably make some angel investments, work with some founders. I think you will learn more than an MBA, right? And after a point in time, nobody cares what MBA is for. It just gives you a network, but networks are, no longer dependent. So, there are no set rules. Remember that. And I said, so no value as such. It's something everybody will say. It's very common information that I'm sharing.
Absolutely, absolutely. That sounds incredible, Ashish. Thank you so much for sharing that with us. As you rightly said, building the right culture is perhaps one of the biggest priorities, one of the biggest hidden priorities for a founder or for a senior startup team member. Thank you so much, Ashish, for joining us today. I hope you had fun. We wish you the very best for the future. Thank you. Thank you so much, everyone, for joining us for this episode. The Indianaut podcast is available on YouTube, Apple Music, Spotify, and Google Podcasts. Be sure to follow us on Instagram and Facebook to receive all updates on the upcoming episodes. We'll see you in the next one.